welcome to Mint. I am Nasrin Sultana. Net inflows into equity mutual fund plunged 64% in the month of April according to Amfi data. In the month of April, the amount was at 31-month low, which stood at 4,229 crore, sharp decline from what we saw in March, which stood at 11,756 crore. In the month of April last year, this amount was around 11,171 crore. However, the good news is in SIP, which is systematic investment plan, there was a steady rise from what we saw in March. The collection of money that came through SIP was at around 8,238 crores from 8,055 crore in March. So analysts are saying the reason for the low inflow into equity mutual funds are various. Let me take you through one by one. First reason is the investors have turned very jittery and nervous around the election date. Remember, India is going through polls and the results for the new government is expected on May 23rd. The second reason is there was a lot of rating downgrades, and the spat of downgrades that we saw in the last couple of days kind of stoked fears that there could be a liquidity crisis in non-banking system. Third reason is there was a lot of volatility in the market. Volatility is measured in the VIX or the VIX, which has risen around 24% in the month of April, and VIX has risen around 59% in this year so far. Volatility index kind of shows what's the market expecting, and this definitely shows that market may correct in the next 1 month. Another reason that analysts say that the reason for the slowdown in the net equity inflow is the rise in crude price. Remember, crude price had risen 6.5% in the month of April. However, it has cooled off now, but in this year so far, crude oil prices are up around 31%. Also, there is another reason for the slowdown in the net inflow in equity schemes is that because of the low distributor push for the expense ratio. Remember, in last year, SEBI had mandated for revision of mutual fund expense ratio, which came into effective only from 1st April. And a lot of mutual fund houses say that this could be the reason for the slowdown in the flow of money into equity mutual funds. Remember, DIS, which are the domestic institutional equities, they are net sellers in Indian equities so far. They have sold around 17,213 crore in Indian market so far, whereas in the month of April they have sold around 4,213 crore. This shows that there is a lot of nervousness in the market. However, foreign institutional investors are still betting on India, and they have bought around Indian shares around 9.87 billion so far, buying around 1.54 billion in India. Another data point that we have culled out from the Amfi data is the FMP data, or the fixed maturity plan data. This shows that around 18,029 crore matured in the month of April. However, only a sum of that came back. According to Amfi data, around 384 crore came back to again FMPs. So that's all from now. For more detailed analysis, stay tuned.